Welcome, everyone. It's the cryptolark. Super excited to have on today Adrian from Independent Reserve. They are one of Australia's top cryptocurrency exchanges. Adrian, how's it going?
I'm going excellent, and it's a pleasure to be here, Lark.
Great to have you on. Now, we're going to be diving into all kinds of really great topics today. We're going to be talking a bit about the price and some crazy predictions that have been thrown out by some people, as well as efficient markets and dollar cost averaging and exchanges and regulations and all kinds of fun stuff. So there's going to be a lot of great value in this chat. So make sure you stick around for the whole thing. And now, even though Independent Reserve is an exchange that is great for Australians and for New Zealanders, there's going to be a lot of value in this chat for everyone. And a quick note as well, I am an affiliate for Independent Reserve. So if you are in New Zealand or Australia, there's a link down below where you can get signed up to Independent Reserve and start buying or selling Bitcoin today. But this is not a sponsored video. I'm just really appreciative of Adrian's time to come on and have a chat about crypto because he's been in crypto for a long time. And I love to get the thoughts of OGs, especially OGs who have been building for years and years in the industry. So super excited to hear some of your insights today, Adrian. And I think we'll start off today with talking a little bit about where your story starts. So Independent Reserve started back in, I think it was 2013. Is that correct?
Yeah, that's correct. So I guess my background is in tech. So prior to Independent Reserve, I ran an IT consultancy here in Sydney, and we kind of built large enterprise systems for some pretty large clients here in Australia. We had our own team, and we had a lot of clients, a lot of expertise. And I first heard about Bitcoin probably about 2010. And I guess like a lot of people back then, I didn't give it the attention that it really deserved. I kind of looked at it very quickly and then I kind of dismissed it. I was busy with something else and then I just forgot about it. And then I heard about it again, probably about mid 2012. And I was like, it's this thing that I remember and it's interesting that it's there still. And then I learned that it actually has a value and there's an exchange out there and you can trade it. And I'm like, okay, this thing's around still and I wasn't expecting it to be. It's probably just, deserves more of my attention. So initially I read the white paper, of course, and I was like, oh, okay, this looks really novel. I really liked the economics behind it. I liked the fact that it, represented a hard money. I liked the fact that it kind of modeled the issuance of a precious metal like a gold. It's easy to mine gold at the beginning, then it gets harder and harder. You have to dig a bigger hole. And ultimately, the amount of gold in the earth is limited to what it was when the earth was created. And that's kind of how the issuance model works in Bitcoin as well. And I found that very interesting from an economics point of view. And from a technology point of view, I really wanted to make sure that the tech worked the way it was advertised. So I built my own Bitcoin client, like a little wallet, just to connect to the network. And, are these transactions real? Are these blocks real? Okay, this thing's actually working the way it's meant to work. And it's really interesting and it's got the potential to really disrupt a lot of things. And then I thought, okay, well, maybe I want to get some Bitcoin for myself. Maybe I want to invest. And I found this website online called Mt. Gox. And it seemed to be kind of the only exchange around at the time. This was probably like late 2012, early 2013. Bitcoin's worth maybe $10 or so. And I tried to open an account and I found it really clunky. Then at some point the website would go down for a couple of days and they'll come back up, or there was a hack or something. And I'm like, wow, it's incredible that this, new thing that's got the potential to disrupt the world is being traded on an exchange that was originally built to trade some kind of a playing card or something. I'm like,
Magic cards, yeah.
magic cards, right? Like, wow, this is an opportunity of a lifetime to actually build something in a niche that we've seen really early and we feel like we have the expertise to do it and do it in the right way. So I got together with a few of my friends and we decided to incorporate Independent Reserve in, I think, April 2013. And we spent about 18 months building the platform and, we really kind of built it in the way we felt an exchange needs to work. So, built it in a way that's very secure, very reliable, doesn't go down. Just basically the way, if you log onto your internet banking, you don't need to worry, is this thing going to be around tomorrow? You just kind of know that it's safe. And this is how we approached Independent Reserve. And we also thought that, it's important for the regulators to be in this space because at the time it was absolutely the Wild West. Like there was no regulation, no nothing. People were really putting their money at risk a lot of the time. So we approached ASIC, who's kind of the main markets regulator here in Australia, and we said, we're going to launch this cryptocurrency exchange. Can we get a license to do it? And this license would be called an AFSL. And ASIC basically looked at their application. They said, look, we don't really know what this thing is that you're doing, but since Mt. Gox has gone under, so Bitcoin's gone bankrupt, so you probably don't need it anymore.
Bitcoin's gone bankrupt. Yeah, okay, guys.
It's great to be dealing with such a high level of understanding. In the end, they issued us what's called a relief letter that says Bitcoin's not a financial product. You don't need a license. Don't hurt yourselves. Don't hurt anybody else. Good luck. Well, it had more words than that, but that's basically what it said. And we launched Independent Reserve in I think November 2014. The initial few years were pretty slow. The market was pretty flat, and then we saw the huge spike, in 3 or 4 years ago, and I guess when all the exchanges really experienced a huge boom. So that's kind of been our story.
Nice. That's a good story. It's interesting to see, this early desire to want to build something, right? To actually go in to be an early Mt. Gox user and go, this is rubbish. I've got to build something better, right? Something that people are going to enjoy using more. Now, I want to talk about, I guess, Bitcoin more in of itself. We've seen so much change over the years in the markets, but every 4 years we get this little ping from Bitcoin where we have this Bitcoin halving. So a lot of people talk about the idea of the sort of efficient market theory. So, and the idea of Bitcoin being priced in or not priced in, depending on where we are in these cycles. So what are your thoughts on the Bitcoin halving and this idea that the price is not priced in, or that it is priced in, or that it's going to be priced in?
Yeah, look, I remember being a first-year economics student, learning about macroeconomics, and being told, the invisible hand is going to do its thing, and markets are perfectly efficient, and people are perfectly informed, and they maximize the utility. And as a 18-year-old, that seemed to make sense, and it seemed really great. But then I guess as I grew older and I looked at various different markets, and I guess the cryptocurrency markets more than anything else, I realized that a lot of those ideas don't really hold in real life. So even though everyone knows the halving is coming, everyone knew the last halving was coming, and everyone knew the halving before that was coming. Yet we really saw the increase in the price a few months after the halving. So whilst maybe the market is different now to what it was last time, because it's a lot more mature, the participants are more sophisticated, there's more information out there, there's more infrastructure. Maybe it's priced in this time, but I guess it wasn't the last 2 times, and the numbers speak for themselves.
Yeah, it's a tricky conversation to have when you start saying, well, is it priced in or not? Because, well, what are we really basing that on, right? Is it based on, miner production and their, minimum rate and all these different things? And if that's true, then of course the price of Bitcoin should theoretically basically double after the halving, because then miners will have a much higher floor that they'll need to get out of Bitcoin in terms of price, which I guess leads me on to my next thought, which is about price predictions. We've seen some crazy ones. I mean, I feel like there's not a day that I turn on social media and there's somebody say, it's going to be 100,000 by this month, or 250,000 by that month, or, $1 million at this time, or $4 million, or why not just a Bitcoin's worth $1 billion, guys, $1 billion. That's what's coming. So what do you make of all these crazy price predictions that we see coming out for Bitcoin all the time?
Look, I think it's important to remember this is still very much an unregulated market around the world, which means anyone can say anything, and the consequences of that are usually pretty limited. So, people will say things to attract media attention, to get more followers on their Twitter or whatever. So, you really have to be really careful about what you read. And look, I can't stress this enough, but I feel like everyone that invests in the space should do a lot of research, because, you can't rely so much on the regulators making sure that the information you see is all kind of more correct, or at least a little bit sane. You'll see some, as you said, some completely insane things in the press, and especially if you read things like Reddit or Twitter or whatever, which are, just anyone can say anything, right?
They're bathroom walls. They're bathroom walls. You're not going to go to a bathroom wall and be like, hey, buy Tesla today. Like, oh man, Tesla's going to $10,000. I saw the bathroom stall.
So yeah, do your own research, do your own thinking. Don't rely on what you read as much.
Yep. Flip on the thinking stuff upstairs, guys. That's important. Now, speaking of, needing to be critical and do your own research and all this stuff, right now we're kind of in a bit of a sideways market, and by the time this airs, maybe the market will have turned around a little bit. But right now, at the time of recording this, there's this kind of fear or pessimism in the air about Bitcoin, and it feels like every time we take this sort of 5% dip or something, everyone's running for the exits, and it's like a fire's been started in the theater or something. So, why do people get so freaked out when we see these little bumps in price?
Well, okay, so I wouldn't say that everyone gets freaked out. I think there are a lot of people who like to hodl, who, I guess the people that have been around for a while, they're kind of used to these ups and downs. It's a very volatile market. If you want something very stable, you should buy some bonds. So look, I guess it's hard to see the value of your investments reduce by 3 or 4% in a day, and it has a psychological effect on a lot of people. But I think it's Bitcoin shouldn't be viewed as a short-term investment, although I guess a lot of people like to trade it each day. But I guess personally, if I was to recommend anyone investing in the space, I would recommend them having a much longer-term view and learning more about the economics of it and not worried about the day-to-day fluctuations, because otherwise, they're going to lose a lot of sleep, and ultimately, it's more of a long-term thing, I think.
We got three important letters for everyone out there: DCA, dollar cost average. This is not everyone has time to be living in the charts 24/7 and all these things, or even the desire to. That's a whole different question when we talk about trading, looking at charts all day. Is that how you want your life to be? Maybe. If so, cool, right? There's a whole trading its own thing, but for most people, you can just buy in once a week or every 2 weeks and just wait. Just be patient, right? And you guys actually over at Independent Reserve offer a great tool for that as well.
Yeah, that's right. So we have a tool called the Auto Trader, and it basically lets you trade on a schedule. So you can say, I want to buy $100 worth of Bitcoin once a week or once a month or whatever. And I guess a lot of people have realized that this is a good way to invest in this space, because it kind of abstracts you from the volatility of the market. So every now and then you'll buy at a dip. Every now and then you'll buy when it's high. But if you do it, 100 times over 3 years, those ups and downs will kind of average themselves out. So, a lot of people have done research on, how much money you would have made had you done DCA from 2010 or 2012 or whatever. And I guess most of that comes out, you would have done pretty well if you just bought a little bit once a week or once a month or whatever.
That's it. Slow and steady wins the game. Now, one thing that's got a lot of attention, some people criticize it very heavily, some people are massive proponents of it, is the idea of leverage trading. So it seems nearly every exchange at this point is offering leverage trading, or increasingly more and more we see offering leverage trading. Yep. So do you think that this is having a positive or a negative impact on the crypto markets overall, having the ability to, long and short Bitcoin with potentially sometimes very high leverage?
Yeah, look, I wouldn't call it a positive or a negative thing. It's just basically a thing that you need to be aware of. So whether you use leverage or not, you need to be aware that it exists, because the volatility will increase the more leverage the market is. So what tends to happen is, if the price were to move up or down too much in one day, leverage positions will start to get liquidated, and that actually causes the price to move even more in that direction. So being aware that the market is very highly leveraged, and it is at the moment, means that you need to be aware that it may be more the movements may be larger than you'd expect. So the volatility is likely to be a little bit larger because of the leverage in the market. And then if you do want to use the leverage, you need to be really aware that what that means. So it just introduces another level of complexity, and it puts another tool into the hands of people. And it's just important to understand how the tools you use actually work and the risks that they have.
The risk management part's incredibly important, and I feel like not enough new traders really understand that you have to be super keen with managing your risk.
Absolutely.
When you're doing leverage, I think of it kind of like a bar or something. You go in and you can say, if you want to have 2 or 3 beers with 2 or 3x leverage, well, that's fine. You're going to be okay. Just because you can order 100 shots of tequila at the bar doesn't mean that you should order 100 shots of tequila. And if you do order them, certainly doesn't mean that you should take them. And that's kind of what I think of like with 100x trading. It's very high risk, right? It could be the best night of your life or the worst night of your life very, very quickly. So
absolutely.
Leverage safely, everyone. Don't leverage and
Yes.
drive. Now, I want to move on talking a little bit about, I guess, adoption and where we are in that. I saw, I think it was on somewhere on the Independent Reserve website, something like 50% of Australians under the age of 40 will own crypto in 5 years is the current prediction. So
Yeah.
that's pretty massive. Obviously, it's going to be different between countries depending on adoption rates. Some countries are way more ahead in terms
Mhm.
of crypto adoption or openness to new technology. Others are not. But I think Australia is a great country. It's right there on the cusp of being open to innovation, being open to new technology. My question to you is crypto actually ready for that? I mean, we're stuck with Bitcoin at 5 to 7 transactions per
Yeah.
second. Every time there seems to be a big pump or a big dump, the exchanges all grind to a halt. So, what are your thoughts on that?
Um, I would say yes, almost. I mean, the last huge pump we saw was about 3 or 4 years ago, and as you say, a lot of the exchanges had issues. But I think since that time, there's been massive investments in infrastructure. So, so the last big pump caught a lot of people kind of unawares, and some exchanges were really caught with their pants down. And I think Kraken was down for a couple of weeks, and everyone had issues. I don't think we went down, but our systems were also super stressed, and it's because it just happens so quickly. And I guess to give you an example, for Independent Reserve, during the last huge boom, we had maybe 7 or 8 staff, if that. Now we've got about 32 or 33. So, everyone has really invested in the infrastructure, in the processes that they have, in the manpower. So now, if we were to get 100 support tickets in an hour, we actually have the people to answer them. Whereas before, well, we just didn't have the people, and the other exchanges also didn't have the people. And it's hard to hire people that quickly when the spike happens so fast as it did last time. But I feel like now the infrastructure is, multiple orders of magnitude more mature than what it was back then. So it'll be interesting to see if another huge boom happens, how exchanges are able to handle it.
Yeah, it's you never really know until it's happening how you're really
Yeah,
going to react. You can
that
think,
is
well,
true.
do we have enough people? Do we have enough infrastructure? Do we have enough throughput?
Yeah.
You'll find out, I guess. Now, Independent Reserve, you guys are expanding so to Singapore, right? So
Yes,
the
we
the
are.
monetary authority, Singapore is kind of you found that attractive what they're offering in terms of their policy and stuff like that. So um, why? What's the kind of the idea behind moving to Singapore or expanding to
Uh,
Singapore?
so I guess being in the market here in Australia, and most of our customers are based in Australia as well, it's, during the last few years, we feel like we've developed a great business, and a platform and technology and processes that are absolutely world class. But the Australian market is not that big. It's, Australia's got 28 million people or so. Correct me if I'm wrong. And we feel like what we have could easily be applied to much larger markets. So, we looked at multiple areas of the world. We went to Europe, went to Luxembourg to talk to the guys there, talk to the regulators, went to the Middle East. And then, we kind of had reasons not to expand into those markets. Either the time zone was kind of off because we're in Australia, or it's a little bit far, or we don't like this, we don't like that. But then the MAS over in Singapore announced the licensing that's is coming into place this month. They announced it about 6 months ago, and it looked like a really good piece of regulation. So it's really designed in a way that's not too prohibitive for an exchange to be able to implement, but it has all the things in place to protect consumers, to have good AML regulations, and we thought, okay, this is going to be a crypto-friendly jurisdiction, and it wasn't just us. Pretty much every major exchange in the world is now applying for that license as well. So I think that you're about to see the birth of a new crypto hub over in Singapore. Like in about 12 months, it'll probably be the biggest hub in the world.
Nice. I think Singapore has been just doing step after step after step to just stay ahead of and to capture that business. And they're very clever to
Yeah,
do it. Singapore, one thing they've definitely done over time is to be the financial capital in a lot of ways of
absolutely.
Asia. And this is just them saying this is the next big thing. We need to be ahead of the curve here. Otherwise, Malaysia's
Yeah,
going to get the business, or China's going to get the business, or Japan's going to get the business, and we're going to get the business. So it's
it's
great to see them
such an
doing that.
impressive place. I love it. Yeah, really impressed by it.
Now, with all that being said, Do you think that Australia is falling behind in terms of its regulatory approach towards cryptocurrencies?
So I guess the disadvantage that Australia has over a place like Singapore is that there are many regulators in Australia. There's AUSTRAC, who regulates AML, who are now regulating the industries. So actually, AUSTRAC has often been used as an example around the world of how AML regulation should be implemented in the space. I think AUSTRAC were one of the first regulators to actually start to regulate this industry, which is great. But that happened probably about 20, a year and a half ago, even a little bit more. I think April 2018, from memory. And I guess since then, the other regulators haven't really jumped on board. So I guess the other major regulator in Australia is ASIC. They kind of regulate markets. They're not quite ready to, look at STOs or to allow someone to list a crypto ETF or anything like that. They're kind of a lot more, I guess, more conservative. And there's also another regulator, RBA, the Reserve Bank of Australia, that regulate the payment systems. And all these regulators kind of have, different people working there. They have different definitions of things. So an interesting thing we found was the definition of cryptocurrency that AUSTRAC uses is different to the definition that the ATO uses.
Wow.
So something that AUSTRAC will classify as a digital currency may not be classified as a digital currency for tax purposes, which has all these other implications. So like all these little things make you go, oh, I wish you guys would just talk together. Whereas in Singapore, there's one regulator, MAS, who kind of does everything. So the coordination there is much better. So when the MAS says, this is how it's going to work, well, you're kind of pretty certain
There's
that
no one else that's going to say,
no
like,
one else
well,
to
hey,
overrule them.
actually, yeah.
Yeah, so I feel like Australia's at a disadvantage because of that, and we've kind of seen a slowdown of the innovation from the regulators. I think because they're getting kind of mixed up amongst themselves a little bit. Yeah.
Yeah, it's a tricky industry, I think, for regulators to work on because you have to keep it real. A lot of regulators, they are, not always the most tech savvy people. I know there's a lot of regulators that are. So if you're a regulator listening to this, we love you guys. There's a lot of people out there who know a lot of great stuff. But I think in a lot of ways they're really falling behind. Most countries are falling behind when it comes to crypto regulation. They're just not keeping pace with the innovation that's going on. It's hard for me. I'm a dude who just talks about cryptocurrency on the internet. It's hard for me to keep pace.
Yeah, I mean, we're doing all we can to talk to the regulators, to educate them, but I guess another interesting thing is the MAS, one of its remits is to actually grow the economy in Singapore and to do things that may be good for the economy. In Australia, the regulators are more about, mitigating risks and protecting consumers. So when you talk to them, hey, this can create jobs, they're like, well, yeah, we don't really care because that's not our remit. Our remit is to make sure that, no one gets scammed or everyone's protected, which is great, but sometimes you need to have a risk-reward equation, which I think the MAS does really well. And maybe the regulators in Australia are too risk-averse in some of their decisions sometimes.
Yeah, it's a tough balance. I'm glad I'm not a regulator. I'm just a dude who talks about cryptocurrency.
Yeah.
My life's much easier. Now, speaking of regulations, there's a very important thing that's happening this year, and I'm sure that it's been a lot of conversations had around this in your office, and that is the FATF travel rule. So this is, we can talk a bit about this, maybe explain to everyone briefly who may not have heard of it, kind of what the FATF travel rule is and how as an exchange you're reacting to this.
Sure. So FATF is the Financial Action Task Force, and they're basically an international group of AML regulators. So AUSTRAC is in the FATF, and I guess a regulator from every country, or just about 100 country, is in that group. And the FATF makes recommendations, and then it's up to the individual regulators in the countries if they want to adopt those recommendations, but usually they kind of all do. Otherwise, that country doesn't get to participate in the club of all other countries and be able to transfer money around. So they're almost like a global regulator of regulators. And what they recommended about a year ago was that cryptocurrency transfers are still kind of anonymous. Like you can sometimes trace them via the blockchain, and you can associate an address with a cluster of addresses, then you can associate the cluster with an entity, and there are tools that let people do that. But I guess there's still a level of anonymity in most cryptocurrency transfers. And they looked at that, and then they looked at money transfers that go through a system like SWIFT, where you have to identify the beneficiary of every transfer. And it's the regulator makes sure that the banks know exactly where the money's always going, and then money can be more easily traced. And they said, okay, this is a gap in cryptocurrency. Exchanges should also have an obligation to know exactly, if cryptocurrency gets transferred off of the exchange needs to be able to report where it's going. But then the exchanges reacted and they said, well, look, we can't, because the way crypto is designed is, you send Bitcoin to another Bitcoin address. You may not know, who's the owner of that address. That's kind of the whole point of cryptocurrency. But then FATF said, well, yeah, that's nice, but we don't care. If you want to keep operating, you're going to have to solve this problem. And we look forward to your solution very soon. So basically what they're asking exchanges to do is each time a customer withdraws cryptocurrency off the platform, the customer needs to provide beneficiary details. As in, if I was to send Bitcoin to you, I would have to say I'm sending it to Lark. And then if your account was another exchange, when the other exchange receives that transfer, they have to go, okay, this transfer was meant for Lark. Is it actually going to Lark? And if it's not, why not? And they have to be able to question it and all that kind of stuff. So it basically requires for exchanges to have some kind of a central repository of all transfers going amongst them between different exchanges, whether they can use to say, okay, someone sent this transfer from Coinbase to Independent Reserve. Who was it meant to go to according to Coinbase? And is it actually going to that person? So it requires basically an industry-wide solution that all exchanges adopt. And I guess there's a few different consortiums working on different solutions. At some point, everyone will have to agree on one, because everyone will kind of have to use the same one, because it ultimately has to be like a messaging system between all exchanges, kind of like Swift. Yeah.
It's crazy, and I understand why they're doing it. I don't like it. I'm sure you are probably not a massive fan of it either, but it's coming whether we like it or not. That's
coming whether we like it or not.
That's it.
So we just got to make sure we implement it in the best way possible that causes the least disruption, least friction, and still meets all the requirements that we have to meet. And ultimately, exchanges have to operate within the law, and the law may change, and we have to adapt to that. And whatever our own opinions are, whether we got into this because we're libertarians or whatever, it ceases to really matter once you're running a business that handles a lot of money, employs a lot of people, has a lot of customers. You have to make sure you do things in the right way.
That's it. Very interesting stuff. Adrian, I think we're going to leave the chat there for today, but wow, we covered a lot of great information. Again, anyone who wants to find out some more about Independent Reserve, there's a link down below. You can find it in the description of this video in the top pinned comments. You can go and check that out there. But Adrian, thank you so much for coming on and sharing some of your knowledge with us.
My pleasure. Thanks very much.
Thank you.
Cheers, mate.